Good morning and welcome. Patriot Radio News Hour. Joe and Jason wrapping up the week. Everybody, get your rally caps on as, again, Jay Powell talking right now as we speak. Rate cuts are premature, he says, and more rate hikes could happen. And you know what? I guess that's true, right? Sure. Rate hikes could happen. Rate cuts could heck. Anything could happen, as we all know. Gold's at the highs of the year. Silver not far behind. The Dow is pretty flat today, but a big day on the Dow yesterday. The Dow at the highs of the year. That kind of makes sense, right? You know, gold's at the highs. The Dow's at the highs because, well, the economy is going to get bad. The problem is when the economy gets bad, well, that's when gold really takes off, and Wall Street has issues. But we've got some ground to cover. I'm sure that we'll get more quotes out of Jay Powell as the show goes on. We'll bring them to you. We did get some economic data, which really started the move today on ISM and the very stagflationary. We'll talk about that as well. 800-951-0592. That is our toll-free number. Obviously, the physical delivery of gold and silver, it is what we do. I will tell you, and I guess not a surprise, right, Jason? Big jumps in premiums over the last several days. Prices, spot prices going up. Premiums are going up on top of that. So things, I hope we don't get back to where it was during COVID. Remember COVID, I mean, you had to pay $400, $500 over spot. Let's hope that doesn't happen. I don't see that happening yet, but definitely things have changed. AllAmericanGold.com is the website. Don't forget about YouTube and Rumble. Follow us. It helps. Give us the thumbs up. Share the show. Leave comments if you want. We'll take care of all of that stuff, but it just helps us grow. It helps us get the message out to everybody. And Jason, when we look at ISM data that came out today, two things were very different about this report than what all the headline stuff was, which was on the manufacturing side. They're saying, hey, guess what? I know gasoline went down, but prices continue to escalate. There was gains in some new orders, but employment did not really match. Prices paid rose, well, employment falling. So the manufacturers are saying, hey, listen, the new orders, there's not enough of them. We have too many people. Prices are still going up. We're actually starting to lay off. So that's kind of a little different than the headline. But again, I would say that it's a mixed bag, right? The layoffs say, hey, the next move is down, right? The next move is a rate cut. But the higher prices paid, Jason, that's saying something totally different.
Different, Joe, and well, you were, as you were saying earlier, that these premiums are going up, right? I think I said it a few days ago, maybe early, late last week. I said, look, these soft premiums aren't going to last long, Joe, and then gold is going up, and so is silver. So there's a squeeze on these things, and these markets are what they are, and we know where it's headed. We just don't have the timing. I wish we knew the timing, right, Joe? I wish we knew the timing. Everybody wishes they knew the timing. That's the thing that can make you rich, but I'll tell you one thing that protects what you've got is the gold and silver, and the chance to get it at these prices is not going to be here very long.
Yeah, gold's up $15, 2,052. That is a new high for the year. Close it in. Matter of fact, the next gold contract is the February contract. 2075. So we're the futures contracts are all in record high territory. Silver, $25.30 this morning, and a lot of factors at play when we talk about what's next. Like you said, man, if we knew the timing, right, we wouldn't be doing this show. I'd be hanging out with Bezos on his yacht, right, cruising around the Caribbean. If we knew when, but it is something where Jay Powell today I think really, and this is just what I believe, they're not going to cut until it's too late, because these guys, they're clowns. They by the time their numbers catch up with the reality, it's always too late. I think it's wishful thinking. I think it's nice thinking. Hey, just cut right now, right? Cut now because things are going to get slow. Jamie Dimon out. I'll tell you this. Jamie Dimon is repeating what he's been saying all along, which is everybody better get ready for the recession. And I think he's kind of warning people, like I said, the stocks are they're not at all-time highs, but they're at highs for the year. And Jamie Dimon, I think, is kind of cautioning everybody, hey, guys, things aren't that good. It's like lipstick on the pig. You got a handful of companies where things are okay, but everything else beneath it, not so much. And who knows more about the consumer than the guy that runs the largest bank in the United States? Patriot Radio News Hour. We'll be back after the break. 800-951-0592. Joe and Jason, Patriot Radio News Hour on this Friday. And already, what a Friday it has been. I had to restart my computer. It locked up on me. But the show must go on. We're going to take a quick look here at the markets. The gold, I just said gold was 2052. Scratch that out. Gold's up 20, 2,058. Silver's up almost 15 cents now, 25.42. The Dow is up 100 points. My guess is Jay Powell less than convincing on what these moves are. And again, it's hard, right? You're sitting there, I don't know what to do. What do I do about my paper investments, my debt investments? What do I do with my IRA, my 401k? Because Jay Powell is saying, hey, listen, we're a long way from rate cuts. And hey, don't rule out rate hikes. And again, you know what? Don't rule it out. I'm just saying, don't rule anything out. But that's why we talk about our friends over at YRefi. Fixed rates of return. What does that mean? Doesn't matter. Doesn't matter at all. If you look at Jay Powell's track record, I could say look at the whole Fed's track record. I won't do that. Let's just look at Jay Powell's track record. It's terrible. Terrible. By the time he is what I would call a reactionary Fed chief. What does that mean? He waits until the data tells him something is broken. Look at inflation. Look how long he waited on inflation. Well, it's transitory, all that nonsense, and all this other things. I am convinced that Jamie Dimon's probably going to be right here. It's going to be a recession, and the Fed's going to be late to the game. But that's just my guess. And I think I'll say it's an educated guess, because that's this guy's track record. Check out YRefi. Check him out, up to 10.25% return, right? Fixed, which means it doesn't change, right? Month after month. You got to have a minimum of $50,000. You can use an existing IRA. Some of you can even use a 401k. InvestYRefi.com. Make it simple. Just call 888-YRefi24. But Jason, gold right now surging again. breaking above 2050. Now the computers say buy again, heading here to the previous all-time highs. And I don't, we may have all-time highs in December. You said that last week. Don't be surprised if we hit all-time highs in December. But the setup, that's really what I don't know what gold's going to do day to day. I don't know what gold's going to do next week. But when you take a longer view of it, what does it look like? What are the most likely scenarios for gold and silver next year, the next 3 years, and the next 5 years? And the most likely scenarios are record highs. That's the likely scenario. I mean, that's the most likely scenario based upon what we know today, Jason.
Yeah, and in gold, since just before, the couple of years before 2020, it's been, opening each year higher than the year before. There's a couple of years where it went sideways or a little bit down. But, I mean, 2016, it opened at 1075, Joe. Can you believe that? In 2016, gold opened at about 1075. 1162, 1312, 1287, 1520, 1946. It did dip in 2022. It opened at 1800, but it was 1824 starting this year. Now look where it's at. It's at 2000. So even if it goes down $100, it's going to open up next year at a higher number. And you better believe in 2025, it's going to open at a higher number again. We're not in a situation where there's going to be a sell-off in gold and everybody's going to be 0% interest rates and buy into the funny market, right? The fraudulent market. So gold prices are going to open every year higher.
Coincidentally, bombs are flying again in Gaza. The truce is now over. And of course, this week we heard from the Pentagon, Chucky Schumer, Johnson, Mitch McConnell, right? They're all ready, Jason, to make another deal and throwing a couple of $100 more billion onto the fire. And remember, it's the holidays. Christmas is here, and Congress is getting ready to go away. Remember, these continuing resolutions, these CRs, they come due, and some of them come due in January. Some of them come due in February. But take a note from the Pentagon, who said, hey, listen, those continuing resolutions will keep the spending levels. That's not working. Right? We're going to need a lot more money than that. And again, Jason, I think this is a situation where we're going to see, I'll use Foot Locker as a great example. So Foot Locker yesterday had earnings. And boy, they were happy about it. Because they said, well, Foot Locker says, hey, things aren't going to be so bad in Christmas. I was like, oh, wow, okay. And I went and looked. And they said before, last quarter, they said sales are going to be down 8 to 9%. You know what they said this time? 8 to 8.5%. That was their good news. Not up, down. Hey, that's 0.5% less than you thought maybe a month ago. That's not enough, Jason, right? That 0.5% is not going to be enough. But what I'm getting at is it appears like revenue for the federal government is going to fall again. We had a big fall this year, almost 10%. Yeah. Almost. Yeah. And that's hard when you think about, well, gosh, everyone got raises. Right, just by default, Social Security, right, FICA, all that stuff went up. But these corporations, Jason, a lot less profitable. A lot of them are losing money now. And of course, if we see job losses, we haven't seen them yet. We've seen some in certain spots. But if this economy slows down, I think you're seeing a lot of hours cut. I'm hearing a lot of that. Yep. Hey, I was working 40, now I'm working 35. I was working 32, now I'm working 24, stuff like that. That's less revenue as well. And everybody thought, Johnson's going to be the big guy to stop the spending. That's not happening either.
They might. The revenue might not go worse, Joe, next year. And the only reason I say that is because I know that I'm getting hit with 30% or more higher property taxes. And I know there's a lot of parts of the country that are being hit with the same levels. I've heard like almost the entire country. So you got towns, cities, and states that have to pay federal taxes too. So that kind of property tax revenue going upward might give them a little bit of a reprieve. Revenue might just be down 5% or 8% extra. But I'll tell you, in 2025, you see the revenue just drop like a rock. Then they're just going to jack the taxes up.
I don't think it'll be down 10% again, right? That I think you're right, but here's what, and I guess think about this. So last year revenue fell about $500 million. That's a lot, but we're going to have a deficit in 2024 somewhere right now, best case, 2.4 trillion. Taxes, I'm going to estimate probably a couple $100 billion more down. Well, now that takes you what? 2.5, 2.6, right? Yep. 2.5. And I'm saying 2.5, 2.6 like it's small. We're talking trillions. And that doesn't count. Jamie Dimon again today saying everybody better get ready for a recession. If that actually happens, right, you're talking about $3 trillion deficits, and I don't know where the money's going to come from. We'll print it. I'm saying, who's going to buy it?
Well, and revenues could go way down if somewhere in the early couple of quarters the job losses actually hit and the recession hits full on. Well, then the revenue will drop like a rock. But I'm thinking 2025 will for sure have that whole year of joblessness, and you could see 15 or 20%. I could see massive numbers for loss of revenue because let's face it, I think the powers that be knew this, Joe. I think they knew, and this is why they were hiring not just for digital currencies, but they knew this stuff was coming. And 87,000 new IRS agents, they're going to need to obviously if they're going to hire them, they feel like they're going to pay their weight in their wages, right? By collecting more taxes. That's where we're headed. We're heading for tax. Everything's going to be about taxes. Let's face it, there was a lot of taxes going on in the 1980s. Ronald Reagan was a hero because he dropped the taxes finally after all the inflation had cooled off. Then he was a hero, but we got to get into the tax part of it when the inflation actually stops, which who knows when that's actually going to happen.
Yeah, that's a great point. And remember, after the holiday is over, right, we're going to get a really good look at when does that cushion in the reverse repos, how much time do we have, right? Is it out in February? Is it out in March? I don't think it matters, February, March. We know that is on borrowed time. At the same time, I mean, could we go the whole year with continuing resolutions? I just kind of believe that they're going to do enough, right? And again, the bombs flying again. They'll make sure they'll get all the bombs going. I'm sure somehow we'll get the Iranian threat into it. That'll get the Republicans on board to spend more money. I just have this feeling that in January we're going to get another huge wave of government spending. At the same time, the reverse repo runs out of money. And I think the next move from the Fed, I think before a rate cut, that's just me, before a rate cut, we'll see the Fed stop selling off its portfolio. And I think that's going to be those two events, budget resolutions with higher spending, the reverse repo running out of money, and the Federal Reserve stopping its quantitative tightening are all going to have gold at all-time record highs. And don't be surprised. Don't be surprised to see another $200-$300 in short order. And I'm talking, hey, end of the first quarter. Don't be surprised by that at all.
If things go a certain way in the next few hours, we could have all-time record highs in gold today. We're on the cusp. I mean, I'm looking at 2055 at the one place I'm looking, Joe, and the other place I'm looking says 2076. So, I mean, some places already have it at a record.
Well, and again, the 2076, that is the February contract. I'll call that TV gold right now. A lot of the TV places, because February is the highest traded contract. Then you have London, which Jason was talking about, that lower number. The New York December contract right now up over $20, $2,059. Like I said, the TV contract, 2,077 on gold this morning. But this is why we talk about those are the factors. So in those factors, what could negatively affect it? Well, could we actually get government to cut spending? Now, that would be interesting, because that may be the one thing that actually is also positive for gold, because that would speed up recession talk. I think that's very unlikely. I think the best that we're going to hope for is spending at the same levels. Remember, we're at COVID plus levels, because last year they added 3% to the COVID stuff. So we're at COVID plus levels. And I think the best we could hope for is the maintaining of that, along with these other emergency bills. You know, what they're talking about now. You know, the 100 and some billion here, 50 billion there. But we'll go over the other side of it when we return. Patriot Radio News Hour. We'll be right back. 800-951-0592. Joe and Jason, Patriot Radio News Hour on a very, very busy Friday. Gold again up $21 now, $2,059 and change. Silver, $25.35 right now. $20 liberties. And I'm just going to tell you, this was the price before gold actually shot up this morning. 1 through 19, $22.85. If you buy 20 or more, $22.75 at 800-951-0592. Take the time, continue to add to your portfolios here while it's still somewhat inexpensive, you know, because quite honestly, same thing, silver, by the way, U.S. Silver Eagles, $665, and then on a case of Silver Eagles, $16,250. Both cases, because we're laying out, okay, what about here? You know, we gave you all the, hey, here's all the pluses we see for gold in the next 120 days, right? Economy slowing down. Continuing resolutions. We think there's going to be an agreement for finally getting a budget for 2024. That is probably going to be higher. Best case scenario, maybe the same. On top of the reverse repo facility being out of money, right, which means yields and bonds, right? That's less money to buy all this debt, which we then think because of that, the Federal Reserve has to end quantitative tightening. We haven't even talked about a rate cut, right? These are just in the very early future, okay? Let's look at the other side. Okay, well, let's look at spending. I guess it's possible there could be spending cuts. I don't think anyone believes that. Not to mention also on the positive side, I think they're going to get this extra military spending. We don't know what the number is. Remember last time it was $106 billion plus another 56 billion. So somewhere between, let's say, $100 and $200 billion of more spending. I think that's going to get done as well. Now, I guess you could say, well, that spending doesn't get done, right? So no money for Israel, no money for Ukraine. I think that's highly, highly unlikely. Especially now, Israel, they got the bombs going again, right? Right on time, right? Get the bombs going. Spending. Will we actually get the government to spend less? Especially if the economy is slowing. Could you imagine if they say, hey, Christmas wasn't great. It was okay, but yeah, not great, and companies start announcing layoffs. I don't think Congress has the will to rein that spending in, but if they did, I actually think that may be a positive for gold, because everybody's like, uh-oh, right, the economy's going to get worse because now the government's not spending. The reverse repo. I guess maybe, I don't know how, but I guess maybe it goes to April. Right, Jason? They may say, well, Jason says no, but,
No.
I don't know, right?
I don't
maybe,
think so.
I don't think so either, but it's not that. Put it this way. We know the reverse repo is going to be out of money really, really quickly. How fast does the Fed stop quantitative tightening? I mean, could it be April or May? Yes. It's possible, but I'll say this. I think you'll hear the Fed start talking about ending it no later than January. Somewhere in January, I think you'll get talk about the ending of quantitative tightening. So really, when you look at it, there's really not a lot of things preventing gold and silver to rally right into 2024.
Yeah, that reverse repo market, that people that are looking at it that I watch, they say it's going to be empty. There's possibly one or two of the big banks, Joe, that park their cash there that may be in a stronger position. So you could see the reverse repo market go down to $200 billion and then just stop. You know, if banks want to keep it parked there and keep earning whatever the interest rate. But here's the thing: when the Fed starts to lower, and now here's the thing, they may not lower the interest rates a lot next year, but they can lower if they want that empty, they'll lower the interest rate they're paying in that facility, and then that thing goes empty. So if the Fed raises that, more money will go in there, but most likely at some point the Fed will lower the rates in that facility to get that cash out. And that's what they want,
right,
Joe, because they want to get rid of the cash. They want to get the inflation done. They want to get all that cash needs to be absorbed by the markets, and that's how the inflation goes away. And that's what they're attempting. That's what their soft landing is. The reverse repo kind of is their soft landing, really. But I don't think it's going to work, Joe. I just don't think so.
Right. That's the last. Hey, that's the last of the excess money, and now it's finally all out into the system. But again, I think the problem is. The effects of that reverse repo, when it gets really close, like you said, does it get to like $200 billion? That essentially is empty, right?
Yes,
hey,
yeah.
there's just not a lot there. Like, they've blown through $200 billion in the reverse repo in a couple weeks, this year. I mean, so it's one of those things, and you're right. That's why I think, Q, they're saying no more rate hikes because that would incentivize. Well, let's put more money in the reverse repo because the Fed's going to pay us more. And, of course, unincentivizing would be rate cuts, but it doesn't matter because it's being spent anyway because there's not enough people showing up to buy this debt. It's just that simple. And we really don't know what the true price. Wall Street's supposed to be about price discovery, right? That's what it's supposed to be, the bond market, price discovery. We don't know what the real prices are because they keep manipulating all of these markets, and now they're trying to stop the manipulation and somehow not crash the economy with it. It really is. It's a pretty monumental task, isn't it?
Correct. And there's only a few individuals, a few families that they figure out how they want the markets to go. They're the ones, for better or for worse, that make the decisions on how the markets and where the market's going to go. They do react to what's going on. They don't control the whole world, but they control where rates go. They control the printing of the money. And this is not in just this country. This is every country in the world. And there's a specific place it's going, Joe. We don't know for sure, but we do see, and we can look at history as to where things head in the situation it's in. And this is a bad one. I mean, like I said, the inflation, I think, will come down. I think it's going to look good for a short little bit of time, and then it's going to go crazy, Joe. And when it goes crazy, you can't lower interest rates. They won't be able to do it, Joe. So we'll see. Next year will be interesting, right?
Yeah, very. I think it's going to be really. This year was interesting. Next year's going to get really interesting. We'll be right back. $800-951-0592 2060 now on gold. $20 liberties. These are the old 1866 to 1907. Back when our currency was backed by gold. This is the job the central bank has done. They've turned $20. So you got in your wallet, you got a $20 bill. Go back 100 years. And, of course, with the liberties, even farther, right? Go back 100 plus years. That $20 bill. Think about this. If you let's just say you were an old timer and you took 5 $20 bills and 5 $20 liberties and put them in the wall of your house. And let's just say that the house has been bought and sold, and tomorrow some flipper buys this dump, and they strip it all down to the studs, and in the wall they find 5 $20 bills and 5 $20 gold pieces. Okay, well, obviously $100, right? Maybe the guy can't even take his crew to Taco Bell. Maybe he can take his crew to Taco Bell. Right. Give me, I'm going to go to McDonald's and I'm going to get 7 or 8 Big Mac combo meals. Give me the super size, right, for the $100. Those $20 gold pieces, $2,285, right? I mean, I got to do the math because I went to public school. That's worth over $11,000. That's what the central bank has done. That's what gold has done. And there's all different ways to buy gold because, what don't you hear us selling? Very rarely. I'll do maybe some silver bars or platinum bars or some palladium bars, but we don't sell gold bars. We really don't do a lot in bullion at all. And the reason is twofold. Number one, it's not private. Number two, people say, well, it's cheaper. Like a gold bar is the cheapest way to buy gold. It is. There's no doubt about it. Get a gold bar today, I don't know, $2,200, something like that. Right? Go sell that gold bar. See how you do. If you can get somebody to buy it, you know how many times I've turned away gold bars? I can't even tell you. Now, I buy them once in a while. All right, I'll take it, and it's way back a spot. I wouldn't even pay you $2,000 for a gold bar. Are you kidding? No way. Because you got to give them away. But here's the bigger problem now. Gold's $2,060. Let's say you had 5 1-ounce gold bars you needed to sell. Now you got a problem. Anything over $10,000 when you want to sell in bullion, I don't care if it's gold bars, maple leafs, Krugerrands, pandas, it doesn't matter what it is. Anything over $10,000, okay, come on in. First thing I need your driver's license. I got to take a picture. I got to make a photocopy. Right, and I'm going to get your address. Give me your social security number. By the way, I need you to sign this IRS form. Because that's what we would legally have to do. And then once you've done that, then I can give you your money. And, of course, at the end of the year, guess what? Now I got to pay my accountant to send you a 1099. On top of, then my girl's got to fax the IRS after I've given you the money. The next thing I do is got to fax the IRS. That's the law. It's not the law for old gold. Old gold, we say it all the time. Yep. You got liberties or saints or Indians. You can buy it, sell it, trade it. You can come in here with $1 million worth of $20 gold pieces. I write you a check and have a nice day. What you do with the government is your business. Right?
Right.
I'm under no legal obligation to do anything. Now, until the laws change on that, there's no better way to buy gold than to buy the old $20 gold pieces.
Well, I was just going to say, as you're talking, Joe, I guess if you love the IRS and if you love the federal government, then maybe gold bars is your thing.
Yeah,
But
sure.
otherwise, if you like your privacy and you want to, and you understand that there are other ways to do business that is to your benefit, that's why we have so many customers with Patriot Trading Group, especially in Arizona and Colorado.
It's interesting because when I first started, you got to remember, gold was $300. And a lot of people are like, I'm not worried about that. I just want the cheap stuff. Right? They bought 10 gold bars for, $350 a piece. Well, guess now they got a problem. And here's the thing. $2,061. Looks like it's going to touch the all-time high today. That's where it's going to go. But neither here nor there. I think that's inexpensive. I mean, we could be looking at $2,500 in the next 120 days. Now you're talking about 4 ounces of gold, right? At $5,000, it's 2 gold bars, and you've got a problem. It's 2 Krugerrands or 2 Maple Leafs, and you got a problem. Right now, at 5, you got $10,000 doesn't buy crap anymore. You can't even buy a used car with $10,000. Be smart. I know you're right. Well, gosh, Joe, I got to pay $85 more. Well, worth it. 800-951-0592. Patriot Radio News Hour. Joe and Jason wrapping it up. It's December 1st, right? Santa Claus coming to town. 800-951-0592. I just got a new price sheet at gold at 2,056. Gold's at 2,062. A $20 gold piece. Let's just say, 2056 Monday morning. This 20s I'm selling today will be $23.25. $2,325. If gold doesn't go even higher from here.
Yeah, Joe, I'm thinking if we end on a high today, that the big players are going to be doing a lot of weekend buying with this price frozen for 2 days, and we could see a massive gold rise on Monday. It could go down too, but it's sure looking like Monday's going to be a big gold hike.
A lot of momentum right now, but we've got them on sale at $22.85, 20 or more, $22.75. Tell you what I'm going to do for all you bullion guys out there, because you're right. You can buy a Gold Eagle gold bar for a little less. I get it. So I'll tell you what I'm going to do. Every 20 you order, and it's Christmas. I forgot about Christmas. I still got some of those pre-21 Morgan dollars. Every 20 you buy, I'll throw in a Morgan dollar for every 20. You buy 10 20s, I'll throw in 10 pre-33 Morgan dollars. By the way, I'll just tell you what the cost on that is, because people like to know that. $35 a piece would be my cost on a pre-21 Morgan dollar. If you buy 50, you'll get 50 pre-21 Morgan dollars. $20 gold pieces, $22.85. 10 or more, $22.75. Gold right now is up $23, 2,061. The Dow is, well, that's crude oil. The Dow is up 180. Here's one other thing, too, that people don't understand, because gold's not a stock. Because people go, why can't I buy gold at spot? Right? Why? It's like I can buy Apple on the TV for that. I want you to do me a favor when you're watching the TV, because they don't just show oil. They don't just show gold and silver. Look at oil, and particularly unleaded gas. Unleaded gas on TV is about $2.18. Anybody paying $2.18 for gas? No, because it's a physical commodity. That $2.18 is for a refiner who hasn't even refined it yet. He doesn't even have the gas yet or the oil to make the gas. Right? By the time you get them up here in Arizona, we pay in about $3.50. That's like 60%, right, over what the wholesale price is. When it comes to commodities, believe it or not, gold and silver are some of the best because you're buying it a lot closer to that wholesale or paper price than the vast majority of any of these other commodities. So, but it's something that for people, I think for a lot of people, because they see the price of gold on the stock channel, why can't I buy it for that? And here's the thing: when you're getting two things, when you're buying something really, really close to spot, it's unfortunate. But if the deal's too good to be true, you better watch out. Right? You better watch out for the scammers. And then, of course, ask people the other side of it, too. Well, what happens when I go to sell it? A lot of them don't like telling you, oh, well, yeah, when you bring me now 5 ounces, we're going to have a problem.
Go ahead,
800-951-0592. Get your orders placed today. You'll have it all before the holidays. God bless everybody. Jason and I, we're coming right back.